So with the equity market, I actually just started the recording. So if you guys didn't miss that, or if you guys missed that on the recording, the people that couldn't tune into the call, basically with the recording, what we have here is we have obviously FOMC being a major decision within the market, right? Is Jay Powell going to agree with Trump or is he not? We obviously have current distribution happening in a lot of the tech market. And then you go over to the index level perspective and you can see how we have our preliminary sign of distribution happening, right? So if we get a really nice run up and a short squeeze leading into the FOMC, and then obviously that deleveraging happens from the long side trade, right? And then we obviously get a major UTAD. That footprint from the UTAD into a failure of this 439 level being from FOMC, the distribution will continue, right? And that will lead into like maybe a mid-year counter trend rally from the distribution. And if that doesn't happen, we're going to get a major push through and a blow off top and a major reaccumulation that occurs within the market, and that's going to lead to a distribution later on, right? I don't think we should inject liquidity in the market. I don't think we're in that point in time where any of that kind of stuff should happen. So I do think distribution is going to continue, especially with how the financial markets typically price things in, right? We've already had an active sequence of distribution happening in the overall area, most of the areas of mega cap tech, right? You guys take a look at, like I said, I brought up the MAGS ETF, but now I have to do it for the recording. We already had a crazy amount of volume anomalies in the MAGS ETF, right? You go over to NVIDIA. We already had a major 2 higher high distribution. Could we get the third higher high? I think the LPSY can come off of this imbalance area of the gap, which is a lower high essentially. Do I think it will happen off of that area given the context of a binary event on the way, meaning FOMC, given the fact that it looks as to be no sellers in this general range? Do I think that we could get a third high of distribution into the FOMC that leads to a failure, a lower high, and then finally a drop and a continued distribution all the way down into the lower extremes of the range, followed by probably a break beneath, right? And then a retest and a fall all the way to these unfilled gaps. Do I think that could happen? 100%. I don't necessarily know if there is going to be an LPSY, meaning a lower high off of these areas of the chart, right? So that's why I've been with my long side focus, guys. That's why I've been scattered a little bit into some of these names that are a little bit undercover, and I'll talk about these here in a moment. But I feel as if these can give really nice profit rolls. I've already profit rolled BA, and I still own my March position ever since the bottom of the progress gap being held. We're going to talk about BA and some of the other industrial names. If you guys have been following me for a little bit of time here on like whenever I used to trade the defensives in Q2 or Q1 was the last window where I actually traded a lot of the grandpa stocks and a lot of the defensives, and that being just because after January OPEX we had a lot of the tech equity options expiring, which were obviously really generating that move higher in the whole AI world. And if you guys go over into like QQQ at the current time, you'll see how the schematics were actually aligning with the leaders in the market at the and in that general window. It actually happened a little bit more delayed into March, but it was still around that Q1, Q2 window. Right over here, if you guys go over to like March through April, we had a lot of consolidation and a lot of the progress in terms of higher high stalling. If you guys have been following my Twitter, you would know how they incrementally distribute through block orders at the new highs, right? And then they get absorbed at higher low attempts, but then they just passively distribute this more and more and more at the new highs, and then it eventually leads to a recorrection. Typically, whenever the recorrection happens through like this quick little leg down, you'll see like some sort of news headline or earnings or some sort of binary event kind of lining up with the phase D of distribution happening. If you don't know what phase D is, that's just the last phase of a distribution, meaning that you already have your shakeout, you already have your lower highs, and your structure developing from the highest of highs, meaning this high up here, right, to the point where now you're getting the lower highs subsequently, right? And that leads to like some sort of binary event that catalyzes the markdown, right? If you guys have any questions, feel free to ask me in the general chat. Don't put them in the live chat. I don't read that one. Um, but that was the last window of distribution in which I started to trade more of the grandpa stocks, more of the consumers. I started to see simultaneous springs within a lot of the consumer names. I remember Pepsi was actually one of those. We go over into Pepsi and we'll be able to see how this one had lower extremes for the time being, around 165, right? And as you guys can see, throughout most of March, what this did was it undercut, and then it started to rally and really rip on record high volume essentially on the daily chart ever since the spring. And then it finally got its rotation followed by its pullbacks, its higher lows, right? And then it finally had the risk off rotation acting in full effect by May, right? So a lot of the rotations can essentially be a little bit delayed, and that's why we have to respect the charts more than we respect our more than we like talk about our bias, right? I feel like bias gets in the way with a lot of the time whenever we talk about like the QQQ chart. I was absolutely killing it in terms of trading the short side throughout most of these lower highs. And then I traded the long side down here. And I've got squeezed out of a few shorts as we made our way higher just because I thought we would get that third lower high, and that wasn't the case. I was wrong on that, and that's totally okay, right? It's okay to be wrong, and it's okay to obviously reflect from what you were wrong on. But basically, what my only takeaway was with that was just the fact that SPX filled the election gap. You had so many shorts underwater in terms of trying to front run the fact that we could see a markdown off of like this head and shoulders, and it led to a major squeeze higher. And that left behind a lot of breakaway gaps. So with the breakaway gaps, I'm going to cover this concept, and then I'll go a little bit more into the equities that I'm watching. With the breakaway gaps, we have 6 breakaway gaps. Not breakaway, but you guys know what I mean. 6 consecutive gap ups. With 6 consecutive gap ups, we know how the order book works. We know how the dark pool works. We know how big money operates, right? They operate on passive bids, right? So whenever you have your spot price on the underlying, meaning your current price, and you keep getting these breakaway squeezes higher where, the trend is not stopping ever since the gap trap that happened all the way down here, right? You keep getting these breakaway moves higher that have a lack of consolidation, and they keep moving and keep moving and keep moving to the point where to the left, we have a previous distribution, right, where things looked really gross. And then we obviously get the gap trap, right? And then that leads to a squeeze higher that has absolutely no structural retests. And there's a lot of dark pools that are left behind within those gaps, which is big money. That is billions of dollars, 2 billion, 1 billion, 3 billion, 2 billion, over double digit billions that are left behind in the market waiting to be filled uh, whenever these things happen, right? And this was the December OPEX area, right? So we go over into the index chart and we see FOMC was a major distribution footprint, right? A lot of volume behind that candle, okay? And we had our election gap that was unfilled from whenever Trump won the election. November 6th was the reaction from that. And we built liquidity off of that area, as you guys can see right here at 585. It was these series of daily candle areas, and what happened was we got the undercut, we got a pop, and then we got a drop, we got another undercut, we popped, we dropped, and we got a 3 lower low accumulation that was actually taking place leading into the election gap fill. That led to a squeeze higher, right? But as I talked about around supply and demand dynamics, this was all just simply a squeeze higher that led into dark pools not being able to be filled, and they're creating a path of least resistance now from the downside. So if we do get that distribution footprint, that say for example it's FOMC, they could start spoofing those orders to the point where we start getting not a big time buyer filling in off of those upper end of the areas of the gaps, right? So the upper gap areas, meaning like this gap here, maybe this gap, and it could start pulling all the way back down for a quick recorrection, maybe for a 4 lower low accumulation beneath this low. So I think there could be a big time short within the market, but it's all dependent on what the Fed essentially wants to do, right? Are they going to build a reaccumulation, or are they going to bail on all the inventory on hand and then eventually recorrect it all the way down into the lower gaps towards 565? If we get a major distribution footprint leading into FOMC, I think we're going to 565. If we don't, things are going to get a little weird. They're going to get a little weird mid year, is what I'm looking at. So that's what my broader market perspective would be. There's so many orders to be filled on the gaps, right? And then what are they going to do with their inventory as we creep into the new highs and essentially leave behind a lot of gaps, which would lead to a major distribution, I think, down the road. So with that being said, we'll go into more of the individual stocks that I will be watching. I still think there's a lot of asymmetric risk opportunities, and just your general like the equity market. We'll go take a look at Nike first of all. This is one of those discretionary names that I think is building out a really big accumulation. We left behind a lot of gaps, and there was no big true seller in this area of the market, or this area of the name, right? There was no big true seller anywhere without here. We actually got our earnings, really big volume behind that earnings, and to me that looks a little bit accumulative, and then we dropped a little bit more, not a lot of volume, and the volume actually started to gradually increase, as you guys can see on the volume profile day by day, as we made a new low, and we left behind a big time gap to be filled. Whenever we talk about imbalanced areas on a chart, just the same way that we talked about with QQQ and SPY to the upside, we could talk about, or to the downside with all of these breakaway gaps. We can then talk more about like Nike for the upside that left behind imbalances, right? We're getting major soakage that was obviously down here, right, with the 3 lower low accumulation that then led to a really nice markup. We filled most of the earnings gap. We still have left behind a little bit right over the $90 and 60 something cents, right? And then we gapped down through that earnings. And what we did was we just started to incrementally bid each and every single new low that was made internally, right? Do I think that this could obviously result in a move back to 78 bucks, 80 bucks, which was this previous resistance up here, $79? I do, and that's why I'm positioned right now in this one. It's because I can't really trust tech too much. I think there's a lot of rotations that are happening under the radar right now that are a little bit more quiet, while you get a lot of the upper ends of the tech charts looking a little bit more distributive. So I feel as if the risk to reward on some of these charts is really good. I actually own commons on Nike, and I repurchased those commons. I was previously bullish on Nike down here in the $70 range, and it led to a recorrection all the way up into 90, and I'll be looking for that again. I think we can honestly test 85, and I think that this accumulation could be really, really, really good if we can obviously get the markup in just the more of the broad, the more like just the general market, right? This is a discretionary name that has been on a delayed accumulation ever since we had the Starbucks move. We had a really nice move from Starbucks ever since the lows being in July, right? McDonald's, another area where we had the July lows. And then we have Nike, right, which is one of those ones that have not seen the true markup. However, they have failed to displace beneath this previous low, meaning they could not push it beneath and then base it and then drop even further, right? It was more of a sweep of that level on January 16th, followed by a markup that we've had for the last 3 trading sessions. No big seller anywhere throughout this leg lower through the volume, as we can see. And the volume started to gradually increase as we got past those holidays and made a new low. Now we could obviously target back to the upside towards this resistance. We could obviously start getting a pop through maybe what looks to be some sort of trend line. It kind of looks like QCOM a little bit. Not necessarily the same exact schematic, but we go over to QCOM now. And this was a previous trade that I had where things looked really, really nice as we started to fail to displace beneath the previous low. We got higher lows subsequently from the spring that happened beneath 151.39. And then we got a path of least resistance where we were testing into 165 once, twice, 3 times, 4 times, 5 times, 6 times. We got a high tight inside bar that actually happened on January 17th, followed by continuation on a break and a release through that area. Now we're getting really strong weekly prints, right? So I feel as if a lot of these names are providing us really nice opportunities in terms of very minimal risk, yet a lot of reward for the upside. So QCOM being one, another one being Nike. Now we go over into BA. I'll talk about BA here in a moment. These are just my current trades. I'll talk about the trades that are obviously on my list here as we move forward. So with BA, we actually we had a early earnings. Pretty weird to me. If you guys actually go look at the current chain and the 0.50 delta on the current chain, we could actually squeeze tomorrow if we can remain relatively propped over like 177. Basically this level here. If we could mark our way back higher up above like this resistance, I think that this one could be a really nice mover for tomorrow. But in terms of the trade that I was eyeing up and the trade that I had was just kind of like how I talked about with MMM. We had a lot of under the hood rotations happening. We had a major volume footprint here on October 28th, followed by a quick little undercut of that weekly support, followed by a reclaim, and then we had that same path of least resistance model being set up here on the BA chart. It was actually beneath this weekly level that was sitting here at 162.50. And what we did was we essentially just pushed. We had a major volume area on the name here with 66 million volume traded, followed by an undercut and then high tight range being built towards 162. Obviously, that is a result in consecutive tests with major accumulation from beneath us, and then that led to it was almost like a beach ball underwater with a gap fill target all the way up into 174. Now we popped above 174, and then we built out another daily flag. That daily flag was basically just an undercut of the EMAs, and if you guys go to the weekly chart, all it really was an EMA retest on the gap progression area down here at 167. So I sized in and I re-rolled this position off of 167. I got a really nice gain on the March calls and a few gains on the shorter dated calls, and we got the pre-release of earnings, right? And that led to a little bit of a markdown. And that markdown is kind of just sitting off of that 175 area right now. So if we can manage to get above like 175-ish, 177-ish, if we could get above 177, I think that this could be a really vulnerable long side trade to target back up into 180. I'll probably buy into the dip on another trade if we could get back above that area and then target 3 deltas higher all the way up into 181, 180-ish. I don't necessarily know what's going to happen with this one, but these are just the under the hood rotations that are happening. You go over into some of the other industrial names. I already talked about RTX. We have MMM. This one was a major accumulative looking base here that we've had ever since we actually lost the $95 area, right? And then that led to a 1, 2, 3 lower low accumulation, followed by higher lows, and then a high tight range being built here off of like 92, right? And then once we reclaimed above that 92 area, that led to a move higher, and then obviously the SOS on top of like the creek, which was 94 bucks. So I feel like the market was obviously pricing in what what's going to happen with FOMC, and I could sound delusional about that, but I still do think we distribute a little bit more within the tech sector. So with that being said, what there is to look at moving forward. I think we have a few decent opportunities still within energy. So we go over into Oxy. With Oxy, what I would be looking for is for this $50 level to be held. Do we have the cleanest looking daily structure? No, we don't. If we go take a look at the daily chart, we could see how we have gap fill all the way up into 54 still being not filled. And I think that this would be catalyzed through further distribution within tech. So that could be a stock on watch. That would be something that we would have to wait for until FOMC passes by, just to look at the further rotations moving forward. BE is one that I've been looking at for a very long time. I previously had calls on this one. I sold off on those calls, and then I just kept on accumulating commons above the peg level, which was here at 21 bucks. To me, this is a really good risk reward trade just because of the fact that the weekly chart looks like your lower low accumulation happening where they're incrementally bidding every single new low, and to the point where there was absolutely no seller inventory anywhere throughout this range. It developed into higher lows ever since we got our third low of accumulation, which was this here at $8. And then that led to a absurd move higher throughout the end of November, leading into December. And then we got a very, very, very high, tight flag on the weekly chart with basically tests that were being built off of $26. And then we got the continuation through that range on increased volume with a nice, really strong day into January 23rd, right, which was today, which started January 21st. I think that this chart looks absolutely fantastic, and I think that this one's going to start targeting up into 31.47. So I really do like that. If we go over into Disney, we could see how Disney's kind of the same thing that's going on here, except we have a 126 external high. Kind of similar if you go over into BE with the accumulative base and all of these externals, one being at 31, one being all the way up at 37, one being up at 45, right? We go over into Disney and we have that same thing going on here with major volume on this weekly bar here in the middle of November. And you go into the daily chart and you can see how that was actually the gap opening area, right? So if you're looking at this from a gap perspective, this is actually your earnings gap, right? That's the progress that buyers have made throughout that range. And you guys can see how they tried to base this previously, and then they had a big fat failure with a lower high here on January 7th. And then it dug a little bit more into the actual peg, meaning the actual imbalance where the actual gap was started from. That's where the imbalance was actually created from. And that was at 108.40 all the way down into 102.72. And then we undercut that range. We reclaimed it, and now we're pivoting back above 110 psych. So if we can remain above the 110 psych, that's also a reclaim of your daily EMAs. I feel like that could be a kicker candle that gets us going above 110. And then if we get the continuation above that level, that would obviously lead to a break of that trend line and a push higher all the way back up into where everything is being battled for in terms of sellers versus buyers in terms of control over this major markdown, which was the Q. Was that Q? That's Q2 earnings. So we have a few areas of confluence to talk about here with the Disney chart. However, I really like today's daily candle that we've closed off on, and I would like to see control over 110. So I own size here with Disney. Really not much here to talk about with Disney other than that. If we go over into some of the other charts, we have potential dispersion happening in the semiconductor area of the market, right? That being LRCX, we have a big MU dip here with a big gap down. I want to see what MU can do with claiming and controlling the progress of the MU sympathy gap. Or no. This is not LRCX. This is MU. This is the MU earnings, right? So if we can control this area, maybe pull back a little bit lower, and then start formulating like some sort of like hourly setup where we have an hourly go candle, meaning like some sort of hourly candle, some sort of daily candle that shows us that this thing's ready above pull out our EMAs. So we could take a look at like if this wants to pull back a little bit more throughout this range. We have a previous floor here that was created on this gap, right? And then we got a higher low off of that gap. So if we could get one more higher low anywhere throughout here, I think that that could be a path of least resistance off of 112, and then we can eventually start rallying our way all the way back up into this gap that was off of July 16th through July 17th on this gap down of 6%, right? We left a big gap behind here that extends all the way up into 127. With any sort of high tightness that we've talked about with like the QCOM schematic, we could do the same thing with LRCX, right? So I think with high tightness on LRCX, that could be a really nice opportunity to then target all the way up into like 92 and then eventually 107. So those are two setups that I have on my mind. Not anything too crazy over there. So, yeah. Now with CRM, that's another one that I like. CRM was a big time weekly level here off of 311, 312, and we have that same thing going on in a lot of these different names, but this was one that really stood out to me just because of the fact that this had a major cup and handle weekly look, followed by a higher low, and then a breakthrough. That breakthrough was on really nice volume, and then a retracement. That retracement being into a retest off of that 318.71 weekly level. And then if you go into smaller time frames like your daily chart, we had a huge gap up here on this peg, right? And that was way too overextended, right? And then we obviously retraced a little bit lower, right? Things got a little bit shady, obviously, as we lost the earnings gap low at 331.50-ish, and now we're reclaiming back above that. So I think that this could be a decent risk level to play off of at 331 for a swing trade, all the way back up to the gap highs at 356. I think that this one could be a really nice continuation setup with this last little juice we have left in the rally for like new highs on the Nasdaq. We obviously made a new high here on the SPX here for today before FOMC, right? And if we get that continuation that leads into a distribution footprint, I think that CRM could be a really nice trade. So that's CRM. We'll go over into Apple now. Apple is retesting the levels of October through November support. no doubt in my mind that this is a distribution, right? And I've actually called this one for a little bit of time. Um, if we could get some sort of like undercut of this level or base off of 220, like 221-ish, just that general area, or if we fail to displace beneath the current weekly lows off of like, what's the low here? 219.38. I think that this could be a really nice reversion trade back to the upside to then target 230. But only time will tell with that one. We don't necessarily know what's going to happen with Apple. If you guys go into the hourly structure, you're going to be able to see how they've left behind so many gaps. We have one all the way up here in a 242. We have another one right here at 230. We have another one all the way up here at 250. So it's a distribution in my opinion, right? I think that this was a major shakeout that led to mass liquidation ever since we failed the preliminary range of distribution, meaning that this area at 237 was our LPSY. Is the distribution completed? I don't necessarily know. And could this continue technically all the way down into this low that was created here on the weekly chart on September 26th? It definitely could, but I think that this could be a decent little reversion trade all the way back up into 230. So that will be one that's on my radar. I would like to see some basing happening around this area if it wants to happen off of 220. And then obviously buyers get a little bit more, they show their hand a little bit more with like a really strong orb on the hourly chart. As far as hourly structure goes, I don't think this one really looks too great. So I think that one's going to need a little bit more time. I don't think that's going to be one that I'm going to trade tomorrow. McDonald's. I don't know if I talked about this one yet. This is actually one that I'm eyeing up very soon. So with McDonald's, I kind of want to be long, but I don't want to be too over leveraged long side. Dated calls are cheap on the SPY. I obviously cut those off a little too early. Ever since, like I said, I was long ever since the election gap fill here at 577, followed by a really nice move higher from that 3-4 lower low accumulation that was taking place ever since we built liquidity off of 45. We undercut it once, we undercut it twice. The third time was a gap fill followed by a squeeze higher after we reclaimed that dark pool footprint that was there off of like 481.50, which was a very big dark pool buyer. And then they were placing asks a little bit higher up into like 590. Those obviously got blown through, and it led to a really nice move higher, right? So I don't really want to be too long leading into this window. And do I think that we can pull back leading into FOMC? I think we technically could. Do I think that we could also get a distribution footprint into FOMC? Yes. But if we go take a look at McDonald's, this is one of those names that has a very vulnerable long side trade with reliable risk levels. If we take a look at like our daily chart here at 284, we have a major area of daily support, right? So from right here, we have 283.71 being a daily support, and then we have a gap fill all the way down here that was never filled. And from that gap fill, what we got a major 6-day base on that gap, and then we finally got a daily print exceeding that daily level of equal lows off of 284. If we get that daily equal low control, I think this one could obviously push all the way back up into like 290. Do I think it could happen? 100%. Do I think that this was a low of accumulation being built? I do. If we're looking at most of the volume within this general range and most of the seller patterns within this range, I think that they built so much orders and so much of an absorption off of this area at 302 to the point where if we were to see a lack of sellers at this area of the chart, we would obviously push our ways back higher up into the gap that extends all the way up into 315. So that could be a really nice risk to reward trade for the long side if the market wants to remain relatively propped leading into that FOMC. I want to see what happens around 284, 285-ish tomorrow to obviously make a decision on this one. But some dated calls here seem like a decent trade opportunity. There's really not much more to talk about here with McDonald's, and yeah, that's what I'm looking at here with McDonald's. So I think it's just one big fat weekly higher low opportunity that we have, but we have to get that strong weekly print. Um, Now we go into what was the other one that I had on my watch list? INTC. Same thesis that we have with MU and LRCX. Is the dispersion from NVIDIA going to happen into some of these other semiconductor names like AMD, LRCX, MU, INTC, QCOM? We've already caught a little bit of LRCX. We already caught a little bit of INTC previously over here. We already caught a little bit of a lot of the semiconductor names, right? And this kind of reminds me a little bit of Nike. I'm not saying that all of these trades are going to work out, and that not all of them are going to work out, right? But with INTC, what we have was we had a major breakdown, right? And that led to new lows. And those new lows, I'm sorry, new 52-week lows. Those new lows obviously resulted in a lower high, that lower high being within this major bearish candle. And then we got a ton of volume as we dropped into the new 52-week lows. To me, that's very notable. So basically what I'm looking at for Intel is some sort of digestion in terms of like this earnings level, as well as where this previous support was that led to a reversion back to the upside up towards 26. If we could get control of this general area or put in a higher low on top of where this previous like daily resistance was, which was also defense of the gap, this is a major gap up with a lot of volume behind it. And then we're getting harmonic volume retracements that lead us into what looks to be some sort of higher low attempt that we have here from the gap. If we could get that, I want to be long on this one. Above like 21, 26. If we could pop all the way down into 21 flat, I'm going to be watching this one as well. So INTC, already talked about QCOM, already have a trade within QCOM. BA flush opportunity tomorrow. Disney on the peg. And then we'll add one more to this one, and then I'll wrap things up with that. That being Lulu. This is a discretionary name. We have a couple other pegs like Snow. I'm going to talk more about Lulu just because I really like the risk to reward with Lulu. And I'm not like some sort of master in terms of where the market's going to rotate exactly right now. What my more and less rotation read was energy, XLE, throughout this window. And then further tech distribution that was happening with the XLE rotations. And like I talked about, obviously that's something that's to be determined in terms of like if XLE holds that $90 area. Now we'll take a look at Lulu. We have a major peg formation building up here in Lulu, right? And we take a look at this weekly chart. It's a big high type weekly flag from the flagpole being here on the peg December 2nd candle, right? And we go into the daily chart. We undercut the peg with this low right here off of like 368. And we have a major gap fill target for the upside from 418 all the way up into 478, right? So if Lulu can remain relatively strong looking above 377, which is the earnings area high, that's the opening of the earnings candle, then that could be a decent risk level to also play off of that we can associate with like a test all the way back up into above 420, which was ever so slightly a test of this bear gap, right? And off that test of the bear gap, we got relatively low volume throughout most of this range in comparison to the really heavy volume on the earnings candle, with a major markup of plus 15% on the underlying. So I think buyers are still in control of Lulu. I'm probably going to re-enter a swing trade on this one soon to then target a little bit higher, all the way up into like above 420. So that will be an interesting one to watch. Technically, with today's daily candle, we got both of our 9 and 21 daily EMAs curling tightly up against the lows of today at 380. So we have a really nice confluence here. I think with a lot of these names, they might just take a little bit of time or just a slight little pullback to be able to see how that pullback properly digests. Because, like I said, within the broader market perspective, I don't really want to be too long as of right now. And that's why I've been kind of protecting my port with like, okay, I have some longs. I'm going to try some shorts and see if I could get both working. Sometimes the shorts were working, sometimes they weren't. But yeah, I mean, there's not really much more to talk about here and up until we have FOMC. So those are all the swing trades that I'm watching as of right now. I have alerts set on a lot of those at the levels that I was talking about, and those will all be awaiting. Those are all awaiting entries, right? So yeah, I don't know. We'll see, but that's really all there is to it, boys. Does anyone have any questions? Sorry, I muted some of you guys, but that's because you had your mic on, but just type them in general chat. Yeah, no problem, man. Yeah, guys, I could talk all I want about the market, but at the same time, it's like there's so many things on the table that are really dependent on like there's so many events moving forward that are so dependent on where the market's going to move. So at the same time, whenever I talk about like, oh yeah, this could do this and this could do this and this could do that, technically none of it could happen. And we could just be in a full-on out distribution in the overall market, right? Which would just lead to me being able to react to that. So that's why I've been saying preservation of your mental capital and really laying low and just taking stabs on tight risk at certain names where you have a little bit of risk on the table, but you don't have enough to kill your confidence moving forward into a window where things can be a lot more vulnerable, right? In terms of like tech leaders moving forward, I mean, we have Meta and Meta at an area where obviously continuation looks a little bit more promising. We go over into like something like Amazon, and we had a really nice continuation within Amazon. And then you take a look at some of these other tech charts, and they don't look good at all. One being Nvidia, and then you have another one with Apple being already in a distribution. So I think the market's in a very confused area right now, and I think there's not going to be a lot of opportunity in the overall market. That's why I've just been really valuing the areas in the market where there's really nice um, continuation, or either a continuation or a full on out choppy area in a where the upper ends of the chart are distribution, but that could lead to a major squeeze out and a change of hands if the Fed does what it does with favoring. I don't even like to talk about macro, but UPST. Actually, I'm gonna add Roku, and I'm gonna add Roku. We'll talk about Roku here real quick, and then I'm gonna hop off. UPST. Um, With UPST, we did fill the gap. We have a lot of volume on that earnings gap. Oh, Gauge, this chart's nice, dude. Damn, dude, your eye has been nice. I mean, that close is nothing to deny. I mean, this could be a good. I'm not gonna lie, Gauge. I'm probably gonna watch this one from 68 to 66 with a really nice retest on 66.71. I mean, dude, that's tight. It's just like, I don't know, man. Am I comfortable with putting on a lot of risk right now? I am, but at the same time, am I really? Like, not really. Like, I haven't been doing that good. Not good enough to put a lot of risk on, and I don't have a read yet that's that good. Oh, bro. Could you imagine? Is that all right? I'm putting UPST on the watch list on a retest. Very short term trade. I'm actually gonna check BA in after hours here real quick. It's down 1.78%. Let's see what this thing does tomorrow morning. Really interested to see. I mean, I already have a position on it, but oh, what's the other one? Roku. This chart's insane. So we'll talk about this one real quick, and then I'm gonna hop off. So we have a gap fill all the way up into 94.50. And we have a major lower low accumulation that was being built beneath 50, all the way down into the $50 psych. And if we go to the daily chart, what we have here on the daily chart would be a huge, huge, huge LPS, right? That LPS led to a continuation higher. It led into a breach of this major bear gap. And we don't have a big time seller really anywhere throughout this range, right? Where more of the dominant volume patterns are actually coming from on the chart is December 4th, which was a really nice gap up through CPI. I believe this was. Or no, it was actually through news. The CPI was all the way through here. This was a really, really, really nice gap up with a lot of volume behind it, and then we just consolidated throughout that range ever since. And then essentially what we did was we filled this gap, and then we held this gap remaining as buyer progress, right? From the top end of the gap. And then we had another gap over here, right? We had so many areas to think about on this chart, but I think it took a little bit more patience than most people had. And it took out a lot of people throughout a lot of this consolidation, right? With a fake breakout here that led to a sell-off. The sell-off led to higher lows from the low being put in. That low being put in, that was like another higher low on the daily and the weekly chart, right? And then we just built out another higher low, and now we're pressing back up against this weekly level at 85 bucks, and then we still have more of a gap to think about targeting into above 87 or 86.75. If we go into the hourly chart, I mean, this is the same shit, man. Just like UPST that we talked about. Really, really, really strong moves. And now, if we take a look at the daily, I mean, that's another gap here hidden on the daily chart right there, 83 bucks. We have a resistance all the way up here into like 84.50, 85-ish. And then above 85-ish, I don't see how this one takes out that 86.75 high. I mean, this chart just looks insane. when you think about it in terms of like a reversion example with major gap imbalances that extend all the way up into 94.50. So the risk reward undoubtedly is big there. We got to control 83. If we could get a pullback into 83, that would be wonderful. I don't think we're going to get that. But in terms of just higher time frame critical levels that we're eyeing up here, obviously like this gap level that we actually just filled today would be important to control off of. Not any crazy volume, but that crazy volume doesn't really matter. And the reasoning as to why that doesn't matter is because the January 23rd candle being today's candle was very strong with a really strong close, right? And then all we really have is this daily resistance above 86.75 and then this little one here at 85 bucks. So if we could digest this area properly, I'll probably end up taking a position. $83 is, like I said, the very important line in the sand to obviously control off of. And then we have, like I said, a 94 upside target. Do I think that whole entire gap can fill in the window that we're looking at right now with the current environment? I don't necessarily know. Um, but with a positive reaction in the overall market to FOMC, this one could easily dig a little bit more into the gap and dig extensively into that gap, meaning that it gets way above, maybe retests, and then goes for the entirety of the gap fill. Depending on if that retracement above this resistance would be on lowering sell side volume patterns. There's a lot of short interest here, and we haven't really seen crazy squeeze action yet. This is kind of a sympathy also to Netflix, with Netflix being in a major markup here. That's Nike. My brain is rotted. Netflix being a huge markup here. January 22nd, right, which is yesterday, actually. We go over into Roku, January 22nd. What did that one do? High, tight, inside bar, and then continuation the next following day. So, yeah, I don't know. I think UPST and Roku can be two stocks that are also on my radar. What's AFRM doing? That one don't look as good. Okay. All right. So, yeah, that's going to be everything that I've got to say here. Baidu is my last one. I already have comments on Baidu. With Baidu, I think this could be a really nice one to then go target. Oh, man. I think this one could go all the way back to $93. This is one of those low accumulation looks that we have on the chart. 1, 2, and 3. If you guys go to the weekly chart, you can visually see that a little bit better. Major dominant volume patterns. If you guys take a look at like this area of the volume profile here, a lot of volume traded there, and then a low volume retracement into a new low. That new low could not obviously move our way lower. We have a weekly resistance here off of $95. And one more new low, and then that was bought up as well. And now we're basically formulating like a 2-day, almost like a high tight flag on like the hourly. And then on the hourly, if you guys can see, every single new low that was made on the hourly now on smaller time frames was of like of less progress, right? And there was a lot of volume on that on this hourly candle here, January 17th, which is also OPEX. So I think OPEX can kind of be showing off something that's going on in terms of like rotations into other things. Like I think we could go to 85. I think we could go to 86.60. I think we could go eventually all the way up into 93. So that's why I have comments right now. But yeah, really nice chart over there as well. So China don't look bad. PDD, we'll take a look at the rest of China. Doesn't look horrible. Doesn't look great. I would like this one to get back above like 110, which is like this big pivot here. If you guys go to the weekly, you'll be able to see that a little bit better. Just this general area needs to be a little bit more controlled off of. And then we go to BABA. Don't look bad as well. We'll take a look at the future here real quick. I mean, that looks insane. If you want me to be completely honest with you, this one looks crazy good. So yeah, I don't know. This is all up for interpretation later on, but we'll see. I'm going to get going here, guys.